Welcome back. Let's get into the market picture now. It certainly has been positive for the most part out in Hong Kong as well as in China, with the Shanghai Composite as well as the Hang Seng managing to eke out gains, just over 0.1% gain on both indices. But Japan's market has now only returned after 2 days of public holidays there, so it's gone down today, filtering in the losses that have sort of happened over the past 2 days as well, with that banking scandal, of course, affecting things out in Asia. Down only marginally, 13 points lost there. It seems like a slight recovery is perhaps on the road when it comes to the European market as well. 2.3% higher for the FTSE 100 today, 1.5% to the good in the DAX out in Germany, with France's market also going a little bit higher there, 1.84% in terms of strengthening. Over into the local index, we're enjoying some positivity as well today, having falling off quite hard. Yesterday only 0.1% lost, but still it was the 6th day of negativity, so we're about to break that streak by the seams of things. We're going up now 2.25%, should I say, in that market picture. The big gainers today, seemingly the industrial counters are nearly 3% to the good there. So some good numbers coming through from that. The likes of Naspers in that folder will certainly boost up the market. Resources have also gone up 2.1%, and that's despite gold miners going down today, 0.33% there, almost 1% gain for platinum miners, while banks have picked up the financials, which have moved higher more than 1%. Pretty much a flat stance for South Africa's listed properties. With regards to the stocks themselves, Cartrack, Telkom and Mediclinic have all gone up today. Telkom, interestingly enough, this week has surpassed SABC to become the third biggest mobile operator in South Africa as well, both sitting with around 12 million odd active clients and active users then, but Telkom's business certainly becoming a little bit bigger. Notably, SABC has actually said that they're looking to move to trying to be South Africa's digital connection provider as well, and trying to mitigate or trying to move themselves to a space where they can deal with South Africans who are working from home, and how that migration is set to build things up. For that, you certainly need a steady network, and with their 9 billion rand debt picture, it becomes so difficult to invest in themselves all over again. So quite interesting on that front. But a whole lot higher for those stocks. In the red, though, we have the likes of Attack, which actually put out a set of earnings there, and they say that they still believe the retail sector is bound to do very well, as despite COVID-19 and the rise in e-commerce and that business point. So they say that despite this, they still believe that big malls are going to benefit them quite a bit. Of course, Attack do own the Mall of Africa in the north of Johannesburg, plus a few malls out in the Western Cape as well. So they believe that despite the negative picture thus far, they will be able to do well. THL is also down 4.33%. So too is the likes of Hammerson too going down today. WBHO, the construction counters, sitting weaker, more than 2% there, 109 rand a share. Onto the commodities board very quickly, slightly up for the Brent crude price, still sitting in a very tight band, just above $40 a fine barrel on that front. Platinum also up 0.1%, 0.5% down though for gold, $1,889 a fine ounce there. And your currencies, weakness then for the local currency now, getting bashed all over again, headed towards 17 rand against the US dollar. We've lost more than 4.3% already this week when it comes to the local currency. That pushes away every single ounce of gains we've made over the past month or so as well. 1986 headed back towards 20 rand for a euro. The British pound also nearly 1% of weakness there, 21 rand 59 cents. Owen Nkomo from Nkunzi Wealth joins us today. Happy Heritage Day tomorrow as well, Owen, if I don't get to chat to you then. But it seems to be our heritage to get weaker when it comes to this rand picture.
Yeah, no, it is, Arabile. But I think that the rand has done relatively well, considering the fact that it's come from already above 17, and it's been making nice ground going towards 17. I think it's just a function of the weak markets over the past 2 odd weeks, really, that has seen some of the major markets currency. And I think the rand below 17 stabilize. We will likely the rand gets strength and again going back to 1650 Arabic.
Hopefully we can get it to that mark. Our own issues are bound to be a big problem, though. Of course, you have South Africa's debt situation, where we'll find ourselves with perhaps a debt to GDP picture surpassing 100% very soon. We have the fact that we haven't put in the reforms we kind of need for this economy to move forward as well. And all of that combined with, of course, the fact that Europe is seeing another resurgence in COVID-19 cases. So trading with them becomes very difficult as well. So growth is just going to be difficult to come by. Even the 3% growth picture from this low base seems very difficult going into next year.
100%. I mean, I'm convinced that our numbers are potentially very conservative, Arabile. The anticipation that our debt is going to peak at about 87%, in my view, is fairly conservative. And I guess we hadn't factored in the impact of COVID. So potentially we go through 90% and slowly approach 100% of debt to GDP, which is obviously going to be a big problem for us because our servicing costs for the debt are also going to continue to increase. The growth in Europe has always been suspect, particularly given the challenges the guys have been having prior to COVID around Brexit and trying to reshape the EU post-Britain. So I think the numbers that you've seen this week are confidently indicating that there's a problem with the growth rate in Europe, and they are our biggest trading partners outside of China and a few other countries. So we need that region to work in order for us to anticipate any growth in the economy as well.
Yeah. We also have a rebound in the equity market. Then, Owen, where does that come from?
No, that's good. I mean, I think the markets have been oversold in the short term. People were taking profits off the table. And the weak currency in South Africa, particularly for South Africa, has helped the market recover a little bit, with some of the dual traded stocks doing better. And I think we are seeing flows coming back into emerging markets after the recent sell-offs. And people are now starting to ask themselves questions about why investing in America makes sense. We spoke about this a while back, where we said that the market is just predominantly rising on the back of technology stocks. And you saw the tech stocks being punished over the past few days. And maybe people are now starting to look for elsewhere for higher yield. If the market does pull back, you need to be, I do think guys will position themselves to an extent in some of the so-called relatively decent emerging markets, which is a very difficult thing to find of late, given the impact of COVID. So I do think there's been a little bit of a switch into emerging markets, and the currency, in my view, is just a function of the markets that have fallen off over the past few days.
Yeah. All right. Well, very finally, then also have that oil price still above $40 a barrel, but only just. OPEC and their affiliates are set to also meet a little bit, I think, later this week, if I'm not mistaken. Quite interestingly enough, though, demand seems to be okay. It's just that they keep supplying the market with a whole lot more.
Yeah, so it'll be interesting to see how that meeting turns out, and I think you are right. There's quite a bit of supply coming in there. The market can still continue to step up some of the supply, but I do believe that at some point, equilibrium is going to be reached. It's also a matter of how the rest of the world behaves after this COVID period.
Yeah, gets very interesting with this oil price. It does bode well for South Africa, though, if the rand could just only strengthen. Looks like we're headed towards 17 rand, unfortunately, so not to be at present. Good to see you in your heritage regalia, though, Owen. Always good chatting to you. Thank you so much for the time. Owen Nkomo from Nkunzi Wealth joining us on the line there. We'll continue to give you the latest news.